Heya, cryptozens. Tonight's show: Argentina's central bank blocks crypto offerings. Nvidia fined over inadequate disclosures. 9 of 10 central banks eyeing CBDCs. It's 10 p.m. Pacific time. The date is May 6th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. We're here to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. At the time of writing, the global crypto market cap is $1.65 trillion. That's down from the $1.68 trillion of yesterday. It's down 1.26% in 24. The top 5 cryptos by market cap are Bitcoin down 1.33%, Ethereum down 1.83%, Tether, Binance Coin up 0.67%, and USDC. Global NFT market cap is at $10.55 billion. Sales volume is down quite a bit though, 8.06% in 24. And finally, according to CoinMarketCap, the top 5 NFT collections by sales volume are Otherdeed, followed by Beans, Doodles, Bored Apes, and Mutant Apes. Now keep in mind, some of these collections have very volatile prices, so do your own research. Argentina's central bank blocks crypto offerings. That didn't last long. It's only been a couple of days. You see, a couple of days ago, Argentina's 2 largest private banks said that they're going to let their customers make crypto purchases. That's right. Banco Galicia and Bank, both first and second largest private banks in the country. Now, Ignacio Carvalho is an affiliate at the market research firm America's Market Intelligence. On Tuesday, he sent out a tweet in confirmation. He had screenshots of Banco Galicia's online interface. And in that interface, it clearly showed support for Bitcoin, Ethereum, USDC, and Ripple. So this has other interesting facets. The town of Soradino, they purchased Bitcoin mining rigs. They were planning on starting their own Bitcoin mining operation. They were expecting several $100s per month. So there might be some friction there. Also, Buenos Aires, capital of Argentina. Their mayor is Horacio Rodriguez Larreta. And we covered it here. Last month, they announced Buenos Aires would start accepting crypto as a form of payment for public financial services. And they're also looking at a blockchain-based digital identification platform for their citizens. So that brings us to today. The Central Bank of Argentina is not a big fan of these crypto-related schemes. They called a halt to financial institutions like banks offering crypto trading. And central bankers are going to do what central bankers do. They claimed concern, the weapon of the kind tyrant. So the central bank said their motive was supposed to reduce the amount of risk crypto presents to investors. Well, that and quote, to the financial system as a whole. Because they cited high volatility, the use of money laundering, and a lack of regulatory safeguards as the causes of their concerns. Now, personally, I am unconvinced. It was just a year ago that the central bank issued a warning to the public. They warned of the risks around the volatility and that crypto might be involved in money laundering. And this was despite the fact that the bank itself said that there wasn't any sign of, quote, significant levels of acceptance and use. Like I said, I am unconvinced. I am not so sure that the central bank is even behind this. I think it actually goes further. You see, Argentina made an agreement with the International Monetary Fund. Now, for Argentina's part, they got a $44 billion extended debt plan last May, right around the time that they issued that warning about how horrible crypto is. which makes sense really, because one of the more unusual clauses in the agreement was for Argentina to, quote, discourage the use of cryptocurrencies, which is just what I would expect the IMF to slip into an agreement with a desperate nation. So, to put this story into perspective, Argentina is facing high inflation rates, crazy high. For the month of February, 52.3% inflation. And that's worse. January, it was 50.7%. April, 55%. So they've got a lot of inflation going on in Argentina. And the sad part is, it's not even that bad for them. In 2019, inflation spiked up over 80%. So clearly, these are desperate people, and these two banks are turning to crypto to offer some hope of relief. You see, right now, 21% of Argentines have owned or used crypto. It was in a Bloomberg poll Monday that reported 60% of them want crypto. Argentina has the sixth highest crypto adoption rate in the world. They want more access to this asset class, not less. Nvidia fined over inadequate disclosures. Now, people ask why gamers get upset over the topic of NFTs. And there's a bunch of reasons. Now, if you are talking about buying stuff to use in a game, there's a lot of gamers that just do not like that. They call it pay to win. They feel that a person's credit card should not be able to give them an in-game advantage. Here's another reason. Video cards. Now, for anyone who isn't aware, video cards are often used to mine proof-of-stake crypto like Bitcoin. In fact, they're really good at it. So that created a force on that economic sector that was unexpected. Now, there are two competing interests now fighting over a scarce commodity, because you've got these grubby little crypto miners buying up all the video cards. So that drives the price of video cards up, which hurts gamers. And so gamers don't like NFTs. That's their logic. And while competition is good, and rising prices can be good, in this case, everyone knew it was just too much. Nvidia. They introduced measures designed to keep people from using their video cards to mine crypto. Now, hackers got in there and then they disabled that. So it's not like Nvidia wasn't aware and taking steps to fix the problem. And that seems to be the SEC's point, because the Securities Exchange Commission announced they've settled charges against Nvidia regarding, quote, inadequate disclosures. Okay, so here's what happened. The SEC put out an announcement that said in the year 2018, Nvidia didn't disclose that mining cryptocurrencies was, quote, a significant element of its material revenue growth. And that doesn't mean that Nvidia had a Bitcoin mining farm just running around somewhere. No, they're talking about what we were just talking about. They knew that a substantial portion of their booming growth was due to crypto miners. And so it was that Nvidia decided to pay a $5.5 million penalty. They're also now under a cease and desist order. This is due to their admission to violating both the Securities Act of 1933 and the Securities Exchange Act of 1934. And see, it seems to be less about the cryptocurrency or even cryptocurrency mining and more about the risk. So that's why the SEC is saying in 2018, Nvidia reported their growth as coming from gaming equipment sales. But they also knew a good portion of it came from people buying video cards to mine crypto. And it's because this is considered to be, quote, related to a volatile business. So because it's related to a volatile business as they see it, and because they didn't tell their investors about it and about the risks involved, that's the problem. That's where the SEC steps in, because you're misleading your investors if you don't disclose the risks that they're expecting a return on. See, Christina Littman is the chief of the Crypto Assets and Cyber Unit. That's a part of the SEC's enforcement division. Incidentally, I just did a piece on them. They've packed on a bunch of lawyers of different types. Anyway, Ms. Littman said this. She said, quote, Nvidia's disclosure fails deprived investors of critical information to evaluate the company's business in a key market. All issuers, including those that pursue opportunities involving emerging technology, must ensure that their disclosures are timely, complete, and accurate. Now, Nvidia made their admissions, and they will face enforcement actions from this SEC case. That said, they actually have a better track record in civil cases. In March of last year, a federal judge dismissed a lawsuit against them. The suit alleges damages, claiming that because Nvidia didn't disclose that a significant portion of their 2017-2018 revenue came from crypto mining sales. And before we close this story out, I want to make sure that it's very clear. Nvidia is admitting nothing. They're going to pay the fine. They're going to be subject to a cease and desist order, but they're admitting nothing. 9 of 10 central banks eyeing CBDCs. So this comes from a survey by the Bank for International Settlements, or BIS. And the results of this survey suggest that many of the central banks around the world are considering pushing out their own central bank digital currency, or CBDC. It's from a paper that came out on May 6th. And in that paper, the BIS says that they surveyed 81 central banks in the time between October to December of last year. 90% of these central banks said that they were, quote, engaged in some form of CBDC work. And more, 26% of them are running CBDC pilot projects. More than 60% of them are actually doing experiments or conducting proof of concept exercises around digital currencies. According to the BIS, that's an upward shift of 7%. It was 83% last year. And this, like so many things anymore, might well be a side effect of the COVID-19 pandemic. That said, there is also significant interest in cryptocurrencies and especially stablecoins. Personally, I consider stablecoins and CBDCs to be directly opposed to each other. Now, in their report, the BIS said, quote, globally, more than 2/3 of central banks consider that they are likely to more or might possibly issue a retail CBDC in either the short or medium term. Work on wholesale CBDCs is increasingly driven by reasons related to cross-border payments efficiency. Central banks consider CBDCs as capable of alleviating key pain points such as the limited operation hours of current payment systems and the length of current transaction chains. Among the things the report brought up was the existence of several CBDCs already in use today. The Bahamas launched their Sand Dollar in October of 2020. Nigeria, they launched their own CBDC like a year later. Also was the Eastern Caribbean D-Cash and China's digital yuan, rounding out those CBDCs making their debut last year. Now, 70% of the central banks that BIS surveyed said that they are also looking at the idea of CBDCs with strong, quote, private sector collaboration and interoperability. They want this to help integrate with the existing payment systems. Burkhard Balz is an executive board member at Deutsche Bundesbank. They said, quote, if well designed, a CBDC could offer access to a safe, instant, and efficient digital means of payment for all population groups, including less digitally savvy groups of society. It would also be beneficial if CBDC could support offline payments. People would benefit from a digital and cost-effective cash alternative to choose from. So, 81 countries surveyed. That represents 76% of the world's population. Now, out of 81, 25 were considered to what they have advanced economies. Encouragingly, the majority said stablecoins pegged to and backed by fiat currency has some potential as a form of payment. That's in contrast to the 60% or so that said cryptocurrency has trivial or no use as far as domestic payments go. 40% said they felt there was no use for crypto in cross-border payments. Now, those numbers are actually higher than I expected, given that you are asking a bunch of central bankers to comment on their competition. Now, they do seem to be following a paradigm. Last March, they completed a pilot project, and this pilot project dealt with international settlements using CBDC with the banks of Australia, Malaysia, Singapore, and South Africa. Then, last April, they put out a paper about how some central banks saw CBDCs as a way to foster innovation and development. Others said they expected CBDCs to work as a complement to existing systems. And that's going to do it for us tonight. Thank you for joining us. I really appreciate it. If you enjoyed tonight's show, then like, comment, and subscribe. Give us a glowing review. Do you have questions or comments? Reach out and let us know. The email address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace